Have you ever hesitated to invest because you thought the stock market was too risky, too complicated, or only for the rich? What if I told you that many of the things you've heard about investing are completely false? Today, we're going to bust some of the biggest stock market myths that might be holding you back from growing your wealth. And trust me, by the end of this video, you'll see investing in a whole new light. Stay with me till the end, because Myth 5 is the most dangerous one that has cost investors millions of dollars. Let's get started. Myth 1. Investing in stocks is just like gambling. One of the biggest misconceptions people have is that the stock market is just like a casino. They think investing is about luck, betting on stocks, and hoping they go up. But that's completely wrong. The stock market is based on real businesses making real money. When you invest in a stock, you're actually buying a piece of a company. Unlike gambling, where the house always wins, in the stock market, long-term investors win more often than not as long as they invest wisely. Example, if you had invested in Amazon 10 years ago, it wasn't a gamble. It was a smart decision based on the company's growth and future potential. What do you think? Do you see investing as a gamble, or do you believe in long-term wealth building? Let me know in the comments. Myth 2. You need a lot of money to start investing. Many people believe that investing is only for the rich. They think you need thousands of dollars to even get started. But here's the truth. With platforms like Robinhood, Webull, and Fidelity, you can start investing with as little as $5. Thanks to fractional shares, you can own a piece of expensive stocks like Tesla or Apple without buying a full share. Example, if Apple stock is trading at $180, you don't need $180 to invest. You could buy $10 worth of Apple stock and still benefit from its growth. So what's stopping you from starting? If you had $100 today, which stock would you invest in? Drop your answer below. Myth 3. You should only invest when the market is doing well. A lot of beginners think that they should only invest when the market is going up and stay out when the market is crashing. But here's what smart investors know. Bear markets create the best buying opportunities. When stocks go down, they're on sale. If you liked a stock at $100, why wouldn't you like it at $70? History shows that the market always recovers after downturns. Those who buy during the dips often make the most money in the long run. Example, during the 2008 financial crash, many people sold their stocks out of fear. But those who bought stocks at low prices saw their investment skyrocket over the next decade. Have you ever been afraid to invest during a market crash? Let's talk about it in the comments. Myth 4. Picking individual stocks is the only way to get rich. You might have heard stories of people making millions by picking the right stocks at the right time. But the reality is, most people don't beat the market consistently by stock picking alone. The good news? You don't need to pick individual stocks to build wealth. You can simply invest in a broad market ETF like the S&P 500 SPY VOO, which includes 500 of the biggest companies in the US. This one investment has averaged about 10% annual returns over the long run. So, do you prefer picking individual stocks, or would you rather invest in a safe ETF? Tell me below. Myth 5. The stock market is too risky. This is the most dangerous myth because it stops people from investing altogether. Many believe that investing in the stock market means they will lose all their money. But here's the truth. The stock market has gone through wars, recessions, pandemics, and every kind of crisis imaginable, yet it has always bounced back stronger. The key to reducing risk. Diversify your portfolio. Don't put all your money into one stock. Invest for the long term. Ignore short-term noise. Stick to strong companies and index funds. Example, if you invested $1,000 in the S&P 500 in 1980 and never touched it, you'd have over $100,000 today, even with all the market crashes in between. Does the fear of losing money stop you from investing? Let's talk about it. There you have it. 5 stock market myths that you need to stop believing right now. If you learned something new today, make sure to hit that like button and subscribe for more investing insights. And before you go, tell me in the comments, what's one myth you used to believe about investing? Let's chat below. See you in the next video.